But what I want to assure you is that every entry here are from opening prices alone. That is basically what we're trading in Zenith Trade now. Opening prices alone. All right. So these are the few trades I've not cleared their previous buys that I've placed. Let's do a little analysis here from structure, high, low, major high, major low, minor high, minor low, for us to determine how we're able to frame these entries. All right, so this is 4-hour time frame. As you can see here, I've marked these places from the higher time frame before the daily time frame. So these are daily opens, these are daily opens. Let's start our analysis from some of where we have this, what's it called, tools placed in the opening prices. So let's start from here. Since a price finds support here, what this place is a major strong low. It is a daily support. You can see I've marked it before, daily support. So since it's a daily support, it's a major strong low, and when price get there, we can see what price did. It pushes up, right, with a directional candle. When price was falling like this and get here and pushes up, okay, creating this candle alone tells a lot of story. Price is ready to reverse. So this is a strong low now. This is a strong low. So from the structural knowledge we've just learned, minor high, minor low, major high, major low, strong low. This is a new strong low corrected. From here, this is a new strong low. So we can see the M. In my structure video I posted, the one I asked you to go and watch on YouTube, you can see I said you always picture your structure in form of letter M for bullish scenario or letter W for bearish scenario. You can see the M is out now. I just mark it. So let me take it back. The next one we can see this is a new strong low and another impulsive leg I've started, but here we have a major high created because it draw liquidity, then it created a minor low. This major high could not break the structure above. So if the major high could not break the structure above, my anticipation is it is ready to change character, right? It's ready because it could not draw above on top of this liquidity. It's ready to change character this way. But coming down, I discovered that it did not break the low, the previous strong low. So definitely the pro trend, the bullish pro trend is still active. So that's why when it first of all sweep liquidity here, right? No, when it mitigate this place, my anticipation will be that okay, it will continue to go. But this high did not sweep liquidity. It did not draw above this. Did not draw on liquidity. Definitely, I am expecting this should only be a reaction. This should only be a reaction. So this is a reaction. Then this is a full leg now coming here. This is a new strong low. This is a new strong low. So look at another letter M. Okay, I couldn't draw it together, but it's also formed letter M from here like this. You can see the structure there. All right, so look at this one. Okay, this will have series of minor structure inside, the new strong low, minor high, minor low, major, it closes above it, the new strong low. We can see we are forming M's, right? Just the way I said you should picture your structure, you can see it. Then the new, what's it called, impulsive leg started. All right, I believe you understand what I'm trying to mark out here. You have to train your eyes for you to see this. It's not going to look exactly the way it is in the schematic diagram or the way it is in your textbooks, but if you practice consistently, believe you me, you get it up with clarity. Now let's see how we enter each of the trades we took. Let's see how we frame our entry. Now that we have know, okay, it is a bullish move, and since it's a bullish move, we will look for directional candles that we're going to enter from its opening price to help price achieve each of its objective in each of the phases, right? So let's see how we enter each of them. Let's see how we enter. We started from here, right? So look at these candles here. None of them come back to the opening price. They are directional candles but did not return. If they did not return, no entry for you. When they come here, it created additional candles. After additional candles, it created what? A directional candle. it mitigate but have not drawn liquidity yet. When price returns to its opening price, we buy. It gave us the night profit. I hope you can see. After giving us the profit, we exit. The next directional candle did not also draw on liquidity. Okay, it draw on liquidity here, but at least we can see a form of trailer liquidity here. It has not drawn the overall liquidity, so it's still a directional candle. We enter from its opening price, give us the result. Though it did not go on time because because of this small liquidity, this reaction was a kind of strong, but it showed reversal sign here. Then it gave us another candle. I didn't enter this, but market it hold going up and see until it reached major high, minor high, reaction, major high. Now after drawing on liquidity, you can see this candle here showing sign of reversal candle. The one I told us that okay, at each swing leg we are going to, it's going to help us tell us a story each time when price is about to reverse. That's what it did here, that's what it did there. So this one, draw on liquidity, this institutional level of market, you can see a new objective is to come and sweep the liquidity of the low, right, or the liquidity here. And when this directional bearish candle open, it closes, I wait for it, didn't come. I have to be patient and be disciplined. A next opportunity will come. This one is not a directional candle, that's why market but didn't trade it, but respect it. This one is a directional candle, almost mitigate, but have not drawn liquidity yet. Yeah, that's a mitigation. So I also waited for what it didn't come. Then this one, the green candle, is a reaction. It did not displace above the high of this. Then this red candle displaces below the low. I know that yes, it's not yet ready to go bullish. Probably it will test any of these 4-hour candles that was created here, the opening prices, and that's exactly what it did. I enter from the what opening price of this candle red, and that's what gave us this. Now testing this, I wouldn't have known if this is the opening price with respect or this, but tapping here, it gave us two reversal signs candle. I hope you can see. Let me zoom this very well. I hope you can see, because this is a very important aspect, right, that you need to understand. See, it gave us two reversal candles telling us I'm about to reverse, and after that reversal candle, it gave us a directional candle, right? After it closed, we wait for price to retrace to the opening price and we buy, and see that swift move, impulsive move, because this is a new strong low now. So these directional candles it created, none of them come back to the opening price. We'll be patient until it get to the sweeping, drawing on liquidity. It did not give us a room to enter. Okay, here it mitigate. When a directional candle mitigate without drawing on liquidity, you can actually enter from its opening price, and that's what we did here. You see, that's what we did here until it draw liquidity proper. And after drawing liquidity, any candle that have drawn liquidity, you are not entering from its opening price again, because objective of that move must have likely be completed. So if a directional candle drawn liquidity, we are not entering from its opening price. If it is mitigate, that's when we are entering from the opening price, maybe to help it move further to complete the objective, right? So here we did not enter from the opening price of this directional candle. You can see, even though it entered just a small reaction and it failed. Now that it is failed, so this is open high. I told us that this one could not break, but we know that this is a minor reaction. It tapped on the opening price of this directional candle, is gave support sign. The next directional candle after reversal, we enter from its opening price, and that's what give us this swift buy. Are we together? That's what give us this swift buy. Yeah. So look at what happened here. Rejection block. It gave us a directional candle bearish. If you want to enter from the opening price and put your stop loss here, you can still enter from it, right? And price begin to, and here none of these candles price retraces their opening prices. We need to be patient, right? And when price drawn this liquidity, it mitigate this place, this rejection block, retraces right up. As it's retracing up here, that's what I say. Okay, since it did not go above this, since this could not break this to give us a major high, probably there will be a change of character. So you have to be patient, because this high could not break this high, right? Remember that this is a form of a minor reaction, expecting a major, but it could not go. So definitely we expect price to continue like this, right? So you have to be patient, and definitely this was actually a reaction because this was a mitigation. So it reacted to this rejection block. As a result of this rejection block, pushes price, this one closes green, thinking to continue the bullish move, and see it is just a reaction. And after it closes bearish, the next directional candle, we waited for it at the opening price, but we could not pick. We could not pick. You have to be patient. When you follow this rule strictly, believe you me, you will filter out losses completely. You could not pick. Then, since we anticipate that, okay, it might broke this structure, this strong low, this is the previous last strong low that price will respect if it's going to, if the pro trend, the bullish trend will continue and it's respected. So when we waited for it here, it could not pick. It created a new directional candle. We enter from it, it peak. It gave us partial profit and tells us that, oh, I'm not going down. Oh, it come up with the directional candle, flip it up, and after this flipping, we know that the pro trend will continue because this strong low is respected. It cannot be broken. Then we continue to follow it up. So the next directional candle opening price, the next directional candle opening price, until I have to come and draw on liquidity here. The next directional candle opening price, even this one here, opening price, right? It hold. The next directional candle here, opening price. Next directional candle here, opening price. Everything here is opening price. Everything here is opening price. I believe we understand how we frame entries using the opening price. As it is going up, they are serving as strong support levels where you enter from until you draw on liquidity. So this is a new strong low, a minor high, minor low, major high, coming back to sweep liquidity of here, right? Opening price. And after this have been swept, the new directional candle going up, a new impulsive leg, Look at, we waited for it at the opening price, did not come. We have to be patient. We're not going to FOMO to enter. If it didn't pick, it didn't pick, right? So none of the one come back to the opening price of all these directional candles. Here it has not mitigated yet. It has not drawn liquidity yet. That's why we enter, it come back to the directional candle of this. Since it is mitigation, it has not drawn liquidity yet, we follow it up. Then we follow it up, drawing on liquidity. We are not trading from any of this opening price because definitely we know that objective must have been completed, and that's exactly what it did. None of this opening price respected after drawing on liquidity. I hope you can see. All right. So as it is coming down now, it's a new objective entirely. We have to be looking for directional candles, right? That will help us achieve the objective of this bearish move. All right. This was just a reaction. It reacted, turns back. We can wait for opening price. It didn't come, and the one that come, that's where we're going to trade. We just put your, once you see a directional candle have closed, put alarm at the opening price of it. If price come back, alarm we alert you, then you place your trade. Put your alert at the opening price 35,220. If it eventually come, it will alert you, you place your trade. Yes. So this is a reaction too. This whole move is a reaction. Then after the reaction leg, the candle that turns bearish to continue the pro bearish trend, put your alarm there for price to retrace to it to continue the pro bearish trend. You see, and that's exactly what we did. All the entries here, we can see they are all opening prices. I believe you can see our frame entries, right? Using these opening prices until the price gets here, and I think these are daily open, right? Okay, yes, daily open and serving as support. Price definitely even here too, but did not respect it. This daily open too. There are sometimes it failed, yeah. So it did not respect this daily open, but respect this one, and price eventually return going up. You see price going up here, right? Look at what happened here. Everything here is what is opening prices of 4H candle servers. Let me zoom it very well so that you can see it with clarity. You see, they are all directional candles going up, opening price, going up, opening price, going up, directional candle, come back to the opening price. Or see, After the reaction, directional candle, opening price. Reaction, okay, there's no reaction here, but this opening price, this one did not come here. Definitely this one mitigate opening price hold going up. Reaction, at the end of reaction, we have directional candle, opening price of it. Can we see? This is a reaction to institutional level. We come back and probably maybe this daily open, we don't know, but this is a major reaction. All these ones are minor reaction, a major reaction, and this major reaction was still a mitigation. It is not super any liquidity, but a directional candle form, opening price, and pushes up. Are we together? So this is how you're going to use 4-hour time frame to frame opening price, to frame your entries, and make sure the candle you enter from is in line with the pro trend bias, so that it's going to help you achieve the objective of that pro trend. All right, so all what you see here is opening prices, and they are all directional candles. If you go to your chart and also look out for this market on 4H, go to M15, place your words buy to or sell to, backtest for test, you'll find out what I'm showing you now, that is 100% true. This is a live market. Everything here, reaction to institutional supply. At the end of the reaction, directional candle enter, reaction, directional candle enter, reaction, directional candle enter. Simple as that. This is a reaction to institutional level, directional candle enter, reaction, directional candle enter, reaction, directional candle. Okay, this one did not pick. So going up. Here price was very bullish, right? Price was very bullish. Price was just reacting to the institutional supply. After the reaction, any directional candle we find, we enter from it. Directional candle enter, directional candle enter, directional candle enter. You see? Okay, this is a recent price action. All right, this is how we enter from each of the directional candles that is in line with the pro trend objective. All right, let's go to the relationship between this directional candles opening price and time. There's a relationship between these directional candles that we are entering from, their opening prices, and time. We have 4 expansion windows, so let's go and look at that now.